Good afternoon and welcome everyone to the Uncensored live Q&A session. My name is Danny and I will give you the webinar today. This is the Trading Talk Uncensored live Q&A session and you guys are free to ask really anything you want along the webinar and hopefully I can give you the best answer I've got and I'll paste the question right here in the dynamic questions. So following the agenda we saw in the beginning, the first part is the previous questions which we're going to review and see how we can answer them. So the first question is, how can reports affect the market? Okay, so we're going to take the question here. We're going to open a notepad for us to jot down the notes, and we will be using the web trader, which is embedded in the website. And to enjoy the web trader, this is the platform. To do this, what you need to do is just to log in with your email and password. So let's maybe clean the screen. This way you guys can enjoy the whole process. Okay, so this is by default what we're going to see. It might look like this. It isn't, as you can see, to minimize or expand the screen is really taking less than a second. And now we're going to select which instrument we would like to answer the question with. I think before we're selecting the instrument, I just would like to introduce you quickly to what's happening here to the left, okay? At the top, as you can see, those menus here, we've got in here my personal details, trade is where we are, positions, orders, history, signals, news, which could maybe be useful for this type of question, but the question specify and ask about reports. So define reports, we're going to go another icon down, and under discovery, we've got few menus here: analyze views, market buzz, forex features, ideas, economy calendar, and trading calculator. So we're going to select what before the end, which is the economy calendar. And in the economy calendar, a lot of various filters which we can specify. Let's maybe clean the selection. Okay, nothing is selected yet, and that's great. Let's pick an event. Tomorrow we're gonna have the non-farming payroll, and the non-farming payroll is more relevant for the U.S. Currency, for the U.S. dollar. And to filter out from all of those things, we see here a long list, right? So to filter from all of this, we want to focus only on the dollar. What we're going to do is click here on the arrow and then click on United States. And now only United States events are displayed. Furthermore, if I would like to focus on the high, since NFP's high impact event, so we're going to click here on high, and we're going to see that just a second, this is the initial jobs claim, and tomorrow is the non-farming payroll. Now, how does that work? As you can see, the calendar here is constructed with the importance, which so-called impact in other calendars, you know. And in here, we've got the actual. Of course, we're not going to have that since the event is tomorrow. So how can we have the actual? This is a sign for the event. Let me show you the differentiation, just a second. There is a red line here. Just hold on. Okay. I just want you guys to see the difference of what happened already, but it's not going to show us that because today is selected. So let's select maybe Monday, then we're going to go to next week and then select like this, and now it's going to show us things that happen, and maybe we went a little too far. Let's go for yesterday, let's go for next week, and here we are. You see there is this red line here that separates what happened to what is upcoming, and this is important because we see here the results of the previous events. So for instance, if I would like to make comparison with, let's see what the question is. Okay, let's first answer the question. Obviously, I want to use this webinar to give you as much as useful content, but let's maybe first answer the question and then I will continue what I was about to say. So how do the reports affect the market? So we're going to go back to where we were. Going to click on today, going to click on tomorrow, and that's enough. And then we're going to see that tomorrow, 6th of June, I think we can focus only on tomorrow at this stage. And here we are. As you can see, non-farm payroll May. We're going to click it to display the information and understand better what this event means. Basically, what it means is all the new jobs applied to US beside agriculture sector, farmers. This is why it's called a non-farming payroll. And how does this affect on the economy? Very easily. Well, we can see that the structure of the calendar is like this. We've got the previous, so this is what happened last time, 177K. What does that mean? That means 177,000 new jobs. The forecast is actually 130,000, which means we're expecting a downgrade. We're expecting a bearish movement in terms of the economy, in terms of employment. And if the actual will come higher than that, okay, let's write down the scenarios just quickly here. So we are focusing on the non-farm payroll May. And we are looking at the parameters in here. So we've got the previous, okay, we've got the forecast, and we've got the actual. So we're gonna have a few scenarios here. We're gonna have, just a second, we're gonna have if it will be higher than expected. So this one is higher than forecast. This one will be, okay, let's write down the numbers first because I want you guys to understand how this thing even, how it works. So previous is 177, we said 1,000. Okay, we're gonna paste it in the previous. And now the forecast is 130,000. Okay. We're gonna also paste it down like that. And now we're gonna play with the actual. So let's suppose that the actual is gonna come higher than the forecast, 150,000. Okay, in this case, and we're also gonna have here a place for, just a second. In here, we're gonna type down the we're gonna write down the possible movement, the natural movement. So in this case, as we can see, this is higher than forecast, lower than, maybe separate it like this, it's easier to see. Higher than the forecast, lower than the previous, which means that this is still not an improvement. It's true, it's higher than the forecast. Okay, we're looking at the change of 47,000 from previous, but still it's not an improvement since it's lower than before, right? In this case, dollar might respond. It's difficult to say because of course the movements are not immediate, so it's difficult to say in this stage. I would say it's roughly balanced, but it's some kind of a decline, right? Let's say that the actual would be let's say 180, okay, very close to what we had and higher than the forecast. It's not really bad, so let's say dollar may positive, right? Again, I'm not, as I said in the disclosure, I'm not telling you what to do or how to do. The question is, how the reports affect, and this is what we're doing here, simulating the scenarios. So we've got here dollar May positive. In here, let's go 180. Let's make it. This time, let's go negative. So let's go 120. I don't want to take it too far. Of course, if it would be something ridiculous like 90 or something like that, so the answer is it's quite obvious. So let's put it like this: May negative. Okay, and lastly, we're gonna have, so this one we had higher than the forecast. This one will be higher than the forecast, higher than the previous, and in here we had, just a second. Okay, so we've got 120 is lower than both, lower and lower. And lastly, let's put something a bit more realistic. So let's actually exaggerate and do it like this, okay? In this case, when it's significantly higher than the forecast in the previous, what do you guys think? The dollar may positive, may negative? If we're expecting a range of 130,000, last time was 177,000, non-revised. So what do you think if now we're going to have another 200,000 jobs, not 177 like last time, or even 130 like the approximate expectation? Well, in this case, again, dollar may positive plus. So we have a reason to believe that the dollar will respond positively, since this reports, as I have explained, describes the new jobs applied beside the agriculture sector. So will this be generally the way that we use to analyze the market? Bigger figure, does that mean that bigger figure we're going to have positive movement? Absolutely not. That depends what we're measuring, right? If we're measuring inflation, if we're measuring anything negative, basically, and the number is higher, so it's not always gonna be higher number means positive. Plus, you have to look at the, as I showed you before, you can look at the previous events and not just this previous result here. You can go back and actually explore what happened earlier this year and make this comparison. So then you can go to the chart, maybe identify similar patterns and do the analysis accordingly, okay, to that. There are a lot of other events in here. We're not going to go through all of them. I just wanted to emphasize this to help understand with this example. Furthermore, I would like to tell you guys that there are 4 icons here, 5 icons, 1, 2, 3, 4, 5, and the 5th is actually allowing you guys to add it to your calendar. So if you want to follow this event and you don't really remember, okay, when is it on Friday, you can quickly add it to your calendar. Then you have a notification on your phone. Great, you can go right away to the calendar, go back to the chart, do the analysis. To my opinion, it's one of the most useful things for those icons. There are other here, impact and volatility and price chart and event chart, but this one is practical and I think it's very useful. Apart from that, I don't think we should delay too much on that question. So in general, I'm going to write down the answer in here, which will be various reports affecting the market differently. We can use an economic calendar based on parameters like previous and forecast to have a range of what to expect. Important tip, bigger, higher result will not always mean positive movement. As we have explained, like I said, that depends what we're measuring. If we're measuring something negative and there is an increase, if there is an increase with something negative, does that mean that the market, the currency will move, the market will move positively? Of course not. So that depends. Okay, so it may. Actually, I'm not supposed to say that. It may, but it's not really natural. We're expecting higher figure on something positive to respond positively, and if we're measuring inflation or God knows something else that is measuring something negative in the economy or any other governmental issues report, so we can expect it the other way around. Excellent. The second question here is, can I make profits trading once a week? I think this may be one of the most common questions we ever received on this webinar. Let's paste that like this. Can I make? Of course, let's click on AvaTrade to go back to the default screen. Then we're going to click on the arrows to expand the chart. And maybe let's have some inspiration from the, I think platinum looks quite interesting. We also have some analysis in here. All right, as you can see, platinum has broke significantly. Let's go back to months. Okay. As you can see, the last time that platinum was this, don't worry, I'm going back to the question in just a bit, but there is no point for me explaining the question before explaining what we're seeing here. So that will be just pointless, okay? So let's just first understand quickly what's here, and we're gonna look at the question. Clicking on buy or sell will open the order entry. This allows us to design the position. And let's see where we are. Can we make it once a week? Excellent. So let's switch to weeks instead of months. I'm doing this by clicking on the time frame, scrolling down, clicking on W1, and now each candle on the chart displays 1 week time frame. And we can confirm this by enabling the crosshair. As you can see, if I'm pointing on the candle, nothing happens. We've got no numbers, no data. But if we click here on the arrow, then select the second option, we've got the crosshair. And when we move our hand across the chart, it does display the correct, the rectangle right here with the data. So let's also minimize the lot size to 0.01. And let's also enable all 3 pending orders, execute when price hits, take profit and stop loss. And we're gonna quickly, just a second. We're gonna go for the current price, place it in here, then we can flatten out the results without the market fluctuating and disturbing us, disturbing the result for us. The take profit is automatic order. It's a pending order. What it allows you to do is to place a certain value on the chart, and getting to that value will close the position automatically with a profit. Stop loss allows you to also design a value, and if it reaches that value, it's going to close the position with a loss. In this case, we're going to look at what happened before. And we're going to see that the next resistance line is actually here for looking at weeks. And the last time that it's actually been on that price was April, but not this year, April 2023. That was 2 years ago. Another time that was even before that, and that was a year prior to that, which was March. Yeah. And we've got 1128 is where we are. Last levels that it couldn't break was 1115. It actually did break those levels, but way in the past. It's less relevant for us at the moment. But as we can see, we still have another $30 to go to here. So let's suppose this $30 is something we can take as reference, and we're going to target a higher take profit to be there. Not exactly there, because we understand that it might turn around before, therefore it might not get triggered. So what we do, there is a question here from Adam. To trade once a week? Yes, of course. What Adam is asking is how I'm explaining is related to the question. Adam, thank you. It's related by me designing a position that is destined to be held for a week. This way, demonstrating that, of course, we can make profits trading once a week, even once a month, even once a year. Therefore, profits are not depending on the how often we trade, but on the strategy, trading plan, and market fluctuations. Okay. What exactly do I mean by that? It means, because we've got 3 trading styles. I'm going back to the chart. I promise you guys, I'm going back to the chart. We got scalping, we got intraday, and we've got swing. This will be 1 to maybe few hours. Okay, maybe not even that, maybe minutes. Let's say scalping can be less than that, can be much less than that. So I'd even write here 15 minutes. I know it's difficult to understand. We can have a trading session of 15 minutes, but when we're scalping, things are happening very fast. Let's say 30 minutes. You know what? 30 minutes. Okay, so we've got scalping, so 30 minutes to I think 4 hours is pretty reasonable. We've got intraday, so 1 day to 1 week, and we've got swing 1 week. Maybe some will disagree and tell me, Danny, swing is for years and months. Maybe, okay, so months and years. And this proves that, let's finish the composition now. I just wanted you guys to have it at the back of your head, and now we can finish the composition. Just a second. This should be 45, like this. And then in here, just a second. Excellent. So we've got 20 higher and 20 lower. That means 1130. That makes it 1110. Excellent. Oh, sorry. That will be, let's just use the calculator real quick. Okay, so this should be actually 15. And here we are. So we've got $15 higher, $15 lower. we're looking at 115 since we've only got 1 ounce, which makes sense. And now we can see if we can make profits or not. Of course, launching the positions like this, we are with a buy. What does that mean exactly? Unfortunately, I have to clean everything to something here doesn't really make a lot of sense. Yeah. Let's extend it a little bit. Yeah, there we are. So we've got 180, then we've got, okay, excellent. Because I wanted to show you, obviously it doesn't really matter a lot what we're doing now with the analysis, since it's briefly done just to help you understand what's happening here. So the question is if we can make profits once a week. Of course, no one can tell you if this position will make profit or not, but we can definitely understand if what's happening here is a realistic scenario or not. So what will happen in this scenario is very simple. Just a second. Okay, so I've placed 2 rectangles on the chart, green one and red one, and I also placed the values for take profit and stop loss, one in red, one in blue, in green. Okay, and we can see now, that if in a week platinum will jump from where it's at to 1180, we're gonna make $50. If it gets down to 1080, we're gonna lose $50. Now we can validate this with an ATR. We're gonna click on the indicator, type here AVE, and then we can drag it to the right, click here save, and we can see that the actual movement per week for platinum is actually higher than that, and it's 59. So of course I can make profits with this position. I can also lose, and this is why there is risk money management and exposure and all of that. But the point here is that profits are not depending on how often we trade, but the strategy, trading plan, and market fluctuations. All right, and we've got those trading styles which we included. So I think we can pretty much finish the answer for this. Okay, maybe I'll make it smaller a bit to fit to the presentation, like this. Yeah. Okay. Okay. Excellent. And now we've got the next question. How much money do I need to make $1,000 a day? Well, we can just as easily paste the question here. Just a second. Excellent. And now if we're looking at the question $1,000 daily, how much do we need? So let's quickly click here on weeks, quickly change it to 1 day. And of course, the reference we wrote down was for weeks. Therefore, 22 is a reference for average per day. So we're going to write here platinum, then we're going to write target 1,000 time 1 day movement, ATR equals 22. Fixed will be 20. Okay, this is a precautious since I don't want to actualize the ATR to its full extent, but I want to have a little less than 100%. And the units we're going to find out now. So let's change the values to match. So we're going to do it like this, and then we're going to go what it was. Excellent. And now we can adjust the lot size. And as you can see, guys, this is an example of a position. Again, no one can know the result of this position. No one can know how the market will move. We're also going to mention that this is a buy and the stop loss. So we've got take profit 150 and then 110. So this is $20 away. Okay, and the point of me writing that down is to show you that this position, just the position that we actually used for the previous question, can help you understand if it's possible to make $1,000 a day. We're talking about possible and not talking about if it will happen or not. Keep that in mind. Sydney, how much do you need to start trading? Well, it's an excellent question. We're going to paste it down. But Sydney, don't expect a specific. Oh, it didn't copy the question. Why not? Maybe now. Okay. Thank you for the question. And now we're going to look at the notes, and we're going to look at the value, and we will understand if we have enough money to open the position. So there is something called price per unit. There is number of units, and if we go price per unit times number of units, we get value. And then we also have something called leverage. What leverage does is it multiplies buying and selling. And since we are multiplied by 10, with the same logic, I can just divide the value by the leverage to know how much I need. So we can go value divided by leverage equals margin impact. And margin impact, necessary amount to open a position. Okay, super simple. The price per unit is 1134 for a buy. If it's a sell, so 1,130. Let's look at the original price since we're intending to buy in here. Actually, let's look at the number in here because I want you guys to see that it's actually calculated automatically. The value is displayed in here. I didn't calculate anything. You see, the value is in here. But if we're going to open a calculator and we're going to go 1,133 times 50, this is what we're going to get, right? This is the value. Okay, so we said we're multiplied by 10. What does that mean? It means that instead of $56,000, I just need 10% off that. How so? Because, as you can see, this is the margin impact. And if we're going to divide this by 10, we don't need a calculator for that, but okay, you get the point. Now, this is an obvious proof that we can take the position. You can see our availability is 10,000 and not 5,000. So we can even we can take the position. I wanted to say we can even have two, but we can't. Okay, if it would been maybe a bit smaller, so maybe we could, but you guys get the point. To answer the question, how much money do I need? The amount of just a second. The amount that we need is determined by a few things. The amount we wish to work with depends on can depend on a few things. What are those things? Margin, requirement, for a position or strategy. That depends if I want to diversify and expand for more positions or stick with one. What else I need to consider is, beside the margin, is also analysis. Okay, so the question is, how much money do I need to make $1,000 a day? I can basically do it with less. I can basically do it with more, but I need to know that I have the ability to open the position. On top of that, I also want to know the exposure, right? With this position, I want you guys to understand that as much as I can make 1,000, I can also lose 1,000 with this stop loss. Okay, now, okay, so I can make 1,000 a day, but if I lose also 1,000 the following day, will I ever make any progress? Not really, right? What I need to do is I need to maintain a successful strategy with a lower exposure. Okay, I can go for higher exposure, but then again, the logic kicks in. And in this case, we've got margin requirement for a position or a strategy, exposure per position or a strategy. This is what we need to know. And we need also daily based strategy. Okay, this is if we wish to make a solid 1,000 each and every day with a new position. If I would like to make 350,000 a year, 360,000 a year, and look at it as a revenue, and then I'm averaging 1,000 a day, it would work a bit different. But at the moment, what I'm demonstrating is physically opening a position to make 1,000, hopefully by tomorrow. So this position is destined destined to be closed, and maybe opening another position similarly, not necessarily with platinum, but then again, planning to make 1,000 again. Okay, but the general process that I've placed here can be replicated with another instrument easily. Okay, just by removing numbers here. Okay, and I hope it makes sense. Sydney, you ask how much do you need to start trading? Your question is similar to what I've demonstrated in here. So let's suppose that instead of 1,000, I would only have $100 in my account. Okay, as an example. Would I be able to take the position in here? Unfortunately not, right? But let's minimize. What about this one? Would 100 be enough? Not really, right? Let's again minimize. Will 100 be enough? Again, no. The answer is no. But this is only for platinum. This is only for platinum, and it's important for me that you guys understand that with $100 that I used as an example, I might be able to trade other instruments, which I'm going to show you in a moment. But first, we're going to paste the answer that we've got in here. Okay. How much money do I need? The amount we wish to work with can depend on a few parameters. Margin requirement for a position or strategy, exposure per position or strategy, and daily based strategy. Okay, those parameters are things that I can acknowledge to determine which amount am I going to work with. Of course, I can work with less. If I like high exposure, I can work with less capital and be more exposed, but this is not the purpose of the question. It's not what the question is asking. It's asking how much money we need. And how much we need is basically the margin impact. But we added another layer to have some logic. Okay. Last question is it better to trade alone or with more people? Well, for this one, we don't really need a chart. I'm just going to write the answer here. with pros and cons. So we've got pros. We actually don't really need that. I'm simply gonna say my opinion about that. Trading alone allows at least myself to focus on the chart. I can put myself some music, have tea, and maybe some cookies, and I can focus purely on the session without anything around me. Trading with a group or with a friend or with more people in terms of taking the trades together or any other similar concept means that I can succeed if the rest of the people succeed. This is again in a scenario that we're all doing together the same things, not just two friends sitting together, each trader trades something else, but trading the same things as a group. So let's suppose I have another 2 or 3 people and we're all trading gold. Yeah, as an example. So trading alone, let's say trading alone gold as an example, or trading with a group, but still again gold, right? That's what I mean with my example. So if this is the case and we're all trading the same thing and we're trading together, of course, if the group succeed, I will succeed. If the group doesn't succeed and I do the same things, naturally, I will not succeed, right? If I'm trading on my own, I do my own analysis. My success depends on me mainly, right? If it makes sense. And like I said, I can focus and I can put myself into it. Trading with a group can also be helpful, but it depends how we're using it. If I'm using the trading with the group as an inspiration on top of as an additional layer of analysis, excellent. I can still use it in my strategy, whatever the group is doing, but I have my own analysis regardless. That's amazing. If I'm depending on the group, and again, if the group succeed, I succeed. If the group succeed, I succeed, and if it doesn't, so also applies on me. I'm not really a big fan of that, but everybody can do whatever they want. So, is it better? I don't know if it's better. That depends. Depends. Trading, okay, so depending on the case, trading with more people can be very beneficial. However, can be very worthy to trade with more people, but that depends, as we said, how we're using the group, the rest of the people. Basically, if we're relying on their analysis, and if it goes well, great. If it doesn't go well, so not great. I'm not a big fan of that. So this is why I wrote, depending on the case, trading with more people can be very good. It's always advisable. However, it's always advisable to have our own strategy and make our own strategy and judgment regardless. This way we have the ability to maneuver, and if something doesn't look right, we can always maneuver in our own way. Okay, great. So we finished those questions. Now let's look at the question that we received. So we got a question from Sydney here. How much do we need? So I believe that at the moment, the minimum deposit amount available is $100, but how much we need to start trading that depends on few things that we wrote in here, right? There is these parameters. The amount we wish to work with can depend on few parameters, margin requirement for a position or a strategy, exposure per position or a strategy, and of course, how many positions and how often we are trading. So this answer applies exactly to what you asked, Sydney, and that's exactly the same thing. You can begin with a small amount and go for higher exposure, and you will be limited with the instruments that you can trade. So for instance, we're gonna use a balance of 100, a balance of 1,000, and a balance of 10,000 to make this comparison. And as we saw, unfortunately, with platinum, even with 0.01, we can't open the position here. But what if we, just a second. But what if we had crude oil as an example? Okay, so for crude oil, if I'll click here on buy, and I'll change the lot size to 0.01, we can see that with crude oil, even with $100, I can open the position, right? You can see that. You can see with crude oil, what did we say? We say that the margin impact is the amount necessary to open the position, right? Does that mean that I can start trading with $100 because I can open a position with oil? Not necessarily, right? The fact that I have the ability doesn't mean that I should, because as I've explained many times, trades is based on can be based on diversification on some strategies. So we want to be able to this position might not succeed, right? So we need to have balance, we need to have harmony, and we need the ability to maneuver with a healthy margin level. We need a healthy margin level to always maintain the margin level, to keep the position open and the account defibrillated. This is why using 63% of the available margin on a single position doesn't mean necessarily that that it's recommended to try to trade with $100, right? What about 1,000 as an example? 1,000 might make more sense. Why? Because if I have 1,000, it's not going to be 63%, it will be 6%. It will be 6%. I'll teach you a nice equation here. If we'll take margin impact divided by balance equals factor, and then we're going to go factor times 100 equals percentage of balance, right? So we're going to look at 63 divided by 100 and multiply by 100, and then we get 63%. If you do the same exercise with 1,000, what do we get? 6.3. So in here it will be 63 in here, 6.3. We don't really need a calculator for that because you guys understand where it's going, and in this case it's going to be less than 1%, right? Like this. For a single position. For a single position, it's important to understand what I wrote here is for a single position. Therefore, if I would like to use, okay, let's see how much time we've got left. Okay, we're very close to the end of the webinar. I just wanted to show you this to answer the question coming from Sydney. And I hope that it makes sense. Sydney, does this make sense, what I'm explaining here? Regarding the amount? So how much do you recommend? Phil, I don't recommend any amount. Phil is asking for a recommendation still. I don't have any amount to recommend because that depends on so many things. So I can tell you, go ahead with the maybe 10K. Does that mean you have a valuable 10K? Does that mean that it will really be good for you? I don't know which instrument you trade and how frequent you trade. So that depends. There is no specific amount that, you know, you can say, let me begin with 100,000. Okay, but I like to trade Nasdaq every day. I like to trade one lot of Nasdaq every day. Let me show you. Does that mean that it will be enough? Maybe. But again, what we need to do and what we can do is we can look at the margin requirement and make a simple comparison. So if I like to trade Nasdaq every day, what do you say? 100,000 will be enough? Obviously not. We can see, right? We can just see. So this is black and white and blue and white, whatever you want to call it. And we can see that the margin impact will not allow us, if we had 100,000, the platform will not allow us to open the position. Excellent. So this is enough. We're going to paste the question at the, we're going to paste the answer at the bottom of the question, like here. And just for you guys to have the equation. Okay. And before we say goodbye, I want to share with you the links to find those things on the websites. On the website, this instead of searching for those. So this is for additional education. I'm sending it on the chat, by the way. I'm sending the links on the chat. We've got here AvaTrade education for additional education. You can find a lot of useful content there. We've got login and deposit for, of course, if you feel that you need more capital in the account and you want to expand your investment. FAQ and Help Center is quite self-explanatory. We've got real account again for still on the demo, and we really want to practice because that's the only way we can improve is we can have a real account. And lastly, the Academy, which you guys know we've already added on the website, and I'm going to show you quickly how to get to it without leaving the website. And as a promotion for whoever came and participated in the webinar, we're going to have the special promotion code, the Q&A benefit. We're going to also paste it in the chat, which you can provide to your senior account manager, and you can receive one-on-one premium market review. Okay, now let me show you quickly how to get to the Academy from the website without leaving the website. So at the bottom of this segment right here, we've got this icon of the chat, and then we got this play button here. The first option is tutorials. The second option is Academy. We're going to click on Academy to go to the Academy. And as you can see, it's taking us to the Academy, and in here in tutorials, it opens the tutorials live on the website. Plus, I can just, if we click in here, play, with subtitles and everything right here on the website. Just look how much content we've got. Just look how many videos on various things. Okay, just look how many various things, trading knowledge in general. Really, you've got this, and you've got plus what I said in the beginning, and the Academy, of course, and also our YouTube channel, which you can find a lot of useful webinars, recorded webinars there as well. So there are so many ways to expand your experience, really, for you guys to use. All right, so unfortunately, we're out of time for today. It's been a pleasure giving you the webinar today. I hope that it was useful and you could pick up at least one practical thing from today. You're all welcome to join us next week for another one. Until then, I wish you all a fruitful week. Best of luck with trading and have a good day.